Hello, it's Wednesday, September 10th, and today, gold's reserve revolution. We're going to talk about this under the framework of what Rosenberg got right. Now, to acknowledge, not a lot of people need me to qualify David Rosenberg getting things right, but he did put out outstanding metrics and a report here that we're going to go through. But we're going to go through it under the bigger understanding of gold standing at all-time highs. This is incredible to see gold and silver, what they're trading at right now. For many of us, this feels more than just a bull run. It's being kind of touted out there as we're in a bull run right now. I would argue for years we've been steadily increasing, and that's what you want to see is this methodical growth in this. But what I want to say in regards to the sense of a bull run is that it's like we've hit the high and there's legs there. It isn't that it's the bomb's going to fall out, that there's no fundamental or technical or any information or data to suggest that otherwise things are progressing with the commodities sector, especially precious metals. It is a very interesting and chaotic time, and that it looks to be very structural, and that there's a further re-rating to go is currently underway, and one that's driven by central banks, geopolitical shifts, and the overwhelming escalating distrust in fiat currencies. At the same time, we have President Trump, who is aggressively pushing cryptocurrency. He's launched meme coins like Trump, WLFI. He's rolled out crypto ETFs, signing executive orders to create a strategic Bitcoin reserve. He's greenlit digital assets in retirement plans. Bold moves. We don't really follow much of the crypto space, not really of a great interest to us, but it's important to know. And it's important to note that the administration is, because it is a core theme of theirs. But even as crypto is being elevated in policy circles, many of the world's fastest growing economies, especially BRICS, are doubling down on gold, not digital tokens. So they're not biting at that. And let's not forget, the visual messaging that Trump's affinity for gold runs deep. If you look, his tower penthouse was famously decked out with 24-karat gold. From marble, crystal chandeliers, lavish Versailles-inspired design and decoration. Even in the Oval Office and the White House interior is now glint with gilded frames, coasters, moldings. Part of what press described as the goldening of the presidency. And that's not just hubris or kind of a lavish expense. It's illustrating, yes, gold. It's important. It's a show of wealth, and it's on his mind because you can still like crypto and you can still have a plan, but there's that understanding that gold is playing a very critical part in things moving forward. So it's not just a juxtaposition that crypto is tomorrow's asset and gold's out of the picture. It's a physical, visual reminder that, yes, there are digital solutions and there's technology evolving, but that gold runs deep. It's part of our core as human beings. And its rarity and its importance won't be diminished, regardless of any technological breakthrough or whatnot. It's 6,000 years worth of data and evidence, and we're seeing that, as a good starting point for people to remind themselves that regardless of whatever push there is for crypto, that gold is really, it's keen in his mind, and it's quite clear. Now, before, once again, we jump into Rosenberg's work as well, right now it's day 2 of Beaver Creek. And for those that aren't aware, the Precious Metals Summit in Beaver Creek, Colorado is the pinnacle for the junior mining world. It's high altitude, invitation only, entirely institutional. And here CEOs, exploration companies, geologists, private equity, funds, family offices, they don't just listen, they build the year ahead. New deals, financing rounds, and strategic shifts are all launched from here in Colorado. And with gold at record highs and central banks aggressively accumulating bullion, the conversations at Beaver Creek will go far beyond drill results. They're going to be about macro reserves, the ordering of global finance, and reshaping of what people consider money. So we really see that being a very important apex right now of news coming out from that. And now when we jump into some of the work that David Rosenberg has done, it's, from the first time since 1996, central banks now hold more gold than U.S. Treasuries in the reserves. So let's just really let that sink in. That is more than, once again, a visual signal. That's a very open acknowledgement that there is shift underway and that there's a flight to safety, regardless of what solutions the U.S. comes up with, regardless of tariffs, regardless of all of it. In fact, that's even strengthening the case that countries that have gold reserves and are increasing them are looking strong. Those that have decided not to or have given them up, or they've really put themselves into a bit of a bind. And this isn't just a trade market cycle. That's the thing that Rosenberg points out, and that most of us in this space really feel, is that this has been steadily climbing. There's been all indications that it would continue to grow, and we've been reconfirmed that this isn't just a high and then a sell-off. I mean, of course, there'll be trading in the commodity, but that there is something structural. It's a structural reset. And the one that has been vocal about this in the mainstream news, outside of our circles that are really focused on mining, is Rosenberg. And we're going to break down his thesis, the hard numbers, what's driving the move, and the fact that central banks are doubling down on bullion. And more importantly, what does that mean for retail? What does that mean for you? So before we get into that, let's talk a little bit about who is David Rosenberg. Most of you know exactly who he is, and there's good reason. He is a very well-known voice in Canada, but even in the US as well, and partly because he is contrarian. He is not your typical Wall Street cheerleader. He made his name as the chief North American economist at Merrill Lynch, which is where I was at as well. And he is one of the very few who actually warned. Lots of people take credit for warning about 2008, but he actually did warn about the US housing bubble and sounded the alarms. While the consensus was all sunshine and growth, Rosenberg sounded the alarm, and guess what? He was right. And he's adamant about what he's seeing right now. After that, he took the job of chief economist and strategist at Gluskin Sheff, and eventually he launched Rosenberg Research. And that's probably where a lot of you are really paying attention. You're looking at his data and the work he puts out, and it's great. What sets him apart is that he, once again, like ourselves, he looks past the noise. All the major headlines and hey, I'm going to distract you by something shiny over here, and looks at, okay, is that pyrite or is that really gold? He focuses on fundamentals, what really matters. He looks at debt, he looks at demographics, fiscal policy, monetary excess, and he is not afraid to be that contrarian voice and to call it as he sees it. His bond bullion barbell thesis, stability in bonds on one side, torque and gold on the other, has become one of the clearest frameworks for navigating today's uncertain world. Once again, I'm not providing financial advice. This is Rosenberg's thesis. It's out there, but it's definitely worth looking at. It's very intriguing. So he says the gold is poised for a restructure, for a re-rating, potentially to $3,000, $5,000, even $6,000. People listen. And certainly I'm just listening because I see lots of upside, lots of growth. But still, it's hard to get your head wrapped around 5,000, 6,000. I mean, it's less hard, lately. People in this space have seen, gold should be 20,000, 15,000, all these numbers, and you can justify those. You can, show case scenarios of realistically where it could go there. But it seems that story has been gone for years and years and years. Whereas it's like now, no, it's happening. It's moving. Is it possible to envision 5,000 or 6,000? Yeah. It's still incredible to think, but yes, it absolutely is. So let's look at some of the numbers and really, as we say, cut down the noise and look at what's been happening here from his research. So gold is now about 27% of central bank reserves, while U.S. Treasuries sit closer to 23%. That crossover hasn't happened since 1996, and that's a big crossover. That sends a big signal. Central banks are buying more than 1,000 tons of gold a year. That's double the pace of the last decade. Once again, this is illustrating when people make comparisons to the 2008 crisis or whatever crisis you want to pick. This is showing you a signal as to what is really happening at the macro level, at the highest levels, including investment banking, outside of retail and outside of the retail news. And hey, look at this. This is where you want to be paying attention to. And it isn't just someone saying something and not doing. This is doing. And this is what we really appreciate about Rosenberg's work, is that it's one thing to say, hey, we're going to pledge money somewhere. And this is an interesting fact as well. A pledge from a government doesn't mean they're actually going to give any money. It's just it's not even a promissory note. It's not even a promise or an MOU. It's just saying we're pledged money. Sometimes none of that money even goes. But to actually buy 1,000 tons of gold a year more, that's just reality. And it goes past the posturing and the talk, and we're maybe doing this or maybe doing that. So these are measurable facts. Central banks, the most conservative, calculated players in the financial system, are voting with their wallets, and that's what you want to see. And they're voting for gold. Are they going to keep selling crypto? Yes. We saw an interesting take from the Economic Times from India, I believe, where coming out of Russia, there was claims that the U.S. administration was going to flood the market in a stable coin and try to devalue that kind of way, that strategy. We've got a take on that in our Substack. Long and short of it, we think that's more conspiracy theory than anything else, and more, once again, noise than anything else. But it's interesting to see that it's being recognized out there, not as much in the mainstream news over here, but it's being seen out there from other countries' perspective as to why they're building their gold reserves. So first, inflation and fiscal instability. Governments around the world are running deficits. Debt to GDP ratios are exploding, and bonds are no longer the safe haven they once were. It used to be simply you just rotate out of equities and go to bonds and to look. And a lot of times, in the good old days of the U.S., they would be issuing U.S. Treasuries and boom, sellout. That hasn't been happening for quite some time. And the major players, like the Chinese, are not buying U.S. Treasuries any longer. So the U.S. has to look at some way. And part of this notion is the stable coin to back it with U.S. Treasuries to encourage another accounting route, to funding or getting out of funding some of the debt, to kind of shape it and restructure it. And this, it's smart. It's great. And this is where Besant as well is very intelligent with the strategy. And once again, there's an acknowledgement around the world that the strategy, that even if it's conspiratorial, is that it's working, that Trump's strategy is working in favor of the U.S. Now, if you are, a global investment bank or a globalist in nature or progressive, and you look at everyone as being, there's no such thing as a country, there's no such thing as a nation, then yeah, you're concerned. And if your portfolio is worldwide, then yeah, you're definitely concerned when you see tariffs, when you see a strategy that says, hey, we're going to focus on making the U.S. great or making Canada great. That becomes very troublesome. And believe me, when you see messaging around that theme, sometimes it is that simple. There's lots of money in lots of different countries that are defending themselves and their positions, because when they see things like this, it becomes quite challenging, to say the least. Lots of geopolitical mistrust. I don't think anyone has to even mention that. It's not news or new news to say that the dollar has been weaponized. People have been claiming that for quite some time. It's just taking a bit of a reshaping from the Biden administration, that people were saying it was weaponized, to the Trump administration. But now sanctions are standard tools of policy. That is new over the past 5, 6, 7 years. And that makes nations very nervous, especially when they see the old administration do it and then the new, that are supposed to be polar opposites and difference. It sends a very clear messaging that, okay, the weapon has been weaponized. So can they depend on Washington? Well, yeah, but you're going to have to make a deal. I think we've all seen that. And people don't appreciate, I'm laughing because it is the strong arm politics. And I would argue that's always occurred when you're dealing with the U.S. It's just maybe now it's more blatant and it's out in the open. And I'm not saying that's good, bad, or indifferent. I'm saying if you own the printing press and you control a military, then yeah, that's your right. That's your power struggle. Is it fair? Fair doesn't equate into anything rational that someone should ever look at when they're dealing with statistics, probability, politics, anything. The notion of things being fair, to me, it's something I lost during university whenever the whole notion of pushing fairness as something that one should monitor just doesn't sit very well with me, because it doesn't take very much of the very smart people who view the world as not being fair to usurp that notion of fairness very quickly and monetize whatever political messaging that comes behind that sense of fairness very quickly. Portfolio diversification. Gold is liquid. It's global. Has no counterparty risk. These are all good things if you're concerned about all those things, which, like we said before, people are. You don't need someone else's promise. It just is. It's gold. This is exactly what Rosenberg warned about: structural over-reliance on debt and this inevitable pivot to bullion as counterweight. So once again, we don't need to reiterate that he's being correct. We've loved his messaging for years, but we wanted to give some flavor from someone quite notable. And once again, take a look at Rosenberg research. Most of you already know it, but great insights. And that's what we want to kind of tell people as well, is that people say, well, Andrew, where are you getting your information from? Well, we get it from all sorts of sources, but this is one of them. And it isn't just, Andrew thinks this, Andrew thinks that. It's that, no, we read lots of very smart people. It's what I do all day long, to see what's real, what's not, what's the noise, and also then apply that critical reasoning and just start asking questions. That's the best thing that any person could ever do in regards to anything. And you don't have to be brilliant or even terribly intelligent to be curious about things and to ask questions. And that's where ChatGPT and large language models can come in quite handy. They'll hallucinate and they'll tell you misleading information just as fast as anyone else. But if you keep pressing and you're curious, and you keep asking, you can force even ChatGPT to answer things correctly. But that's a whole other very interesting topic of discussion. If you're interested, reach out to me. I do it all day long, and it's very, very, very curious. So let's see here, map out 3 scenarios. Once again, this is from the overlay of David Rosenberg's thesis. Base case: gold climbs steadily as central banks keep buying. We see 3,000 an ounce as the floor, and that stays for the next 18 months. So that's a very easy downside risk. Bull case, Rosenberg style: if credibility in the US dollar continues to erode, gold doesn't just climb, it re-rates, and then we're talking 5,000, 6,000 over the next 3 to 5 years. So once again, we're not talking tomorrow it's going to jump, but it's that steady climb. If you look at the chart, it looks good. And then if you compare that chart to, do you see anything in the next year, 2 years, that could really revolutionize and change everything that we know as being fundamental reality regarding debt, the debt load, the issues we're facing geopolitically? There's nothing on the horizon that's a clear solution that everyone goes, everything's solved. Because even if you did believe that AI is going to solve every problem, it's also going to create a whole bunch of other ones. It may increase GDP, but it also is likely to take away a vast number of jobs, which at the same time is bringing down GDP because less taxes are being paid by people and more by corporations. So there's going to be a big shock case regardless. And all these shocks are things that people have in the back of their mind, whether they know it or not. The debt ceiling standoff, sovereign defaults are also major flashpoints that people have to be concerned about. So none of these things are going to happen just overnight. But gold gaps up, very possible. There's going to be lots of trading in the space. We've seen a dramatic move in silver. And remember, gold doesn't move alone. It seemed like for a while it was kind of just dragging up silver just a little bit, but people were sitting there going, what the heck is, Why isn't silver moving? It's been moving. It's certainly been moving in the last year. And remember, it's the beta play. So if you are a trader, which we aren't, but if you are, you know that once again very well. We've had Chris Marcus on, we've had David Morgan on, we've had Peter Kraut on, and we really put that trio as the silver gurus out there. But when silver moves, it's amplified and it moves big. So if you're a Rosenberg fan, you say 5,000, 6,000 gold, well, you can do the math. There's a big upside then as well, as re-rating moves along the line. So let's break this down for you, the retail investor. Gold is not like get rich quick. It isn't. Now you could trade it and you could go to the futures market and you could go load up and do play that game. Once again, that's not for us. We want to talk to the average mom pa out there, the family out there that's looking to say, what should we be doing to be safe, be sound? But then also we like to give them that kind of operational leverage by talking about producers and the entire mining sector, not just gold and silver. And as well then the complete leverage package when you're talking about explorers. So if you're looking at gold, goes without saying, there's 3 different ways that you could frame your possible solution when you're talking to your financial planner or your consultant or your broker. You can obviously buy the physical. You can go to a Sprott and buy the physical. You can buy the ETF, so you can talk to your broker, or even I think a financial planner or life insurance agent with a mutual fund license could look to get your exposure there. Then you don't have to deal with the storage of it. And even if you're buying small amounts, I mean, you might just store it into a safe at home or whatnot. Some people think, those are a couple extra steps. I'm not too interested in physically having it, but I do want the upside. Well, you go to the paper market and you look at the ETFs, and you'll have a number on the screen that correlates to gold. And of course, as mentioned, it's the torque we like as well. And we've seen torque out of the producers. We've talked about torque and operational leverage, especially when we interviewed US Gold. And we can see that those companies that have very low ASICs, that have dropped their cost of production down, are really starting to see some good numbers. Can you imagine what next quarter with some of these gold companies, if we remain above a floor of 3,500, it's going to be nuts. And believe me, these are conversations that are going to be had at the Precious Metal Summit right now. Now, really, that's where the drill sheet comes in. We've made a big stink about this over the last couple months, really, when we released our beta, but we're very happy with what's happening here. And we look for companies with that low ASICs, strong balance sheets, and then also what are the near-term catalysts and what are the near-term projects? Do they have like another project to feed into their system? Great example is Barrick. Barrick, we beat up a little bit because of issues in Mali, but they have a project in Turkey that is pretty outstanding, that makes up for it and more, one could argue. So we like to look at who are the companies out there that will have a project come online that'll be looking fantastic, like a Kinross. In any event, these are things that we want for our subscribers, and we want you to become a subscriber. We still try to keep about 85% of all our blogs, our articles, even some of our company reviews free to people to entice them in. But what we really want is we want to really engage with people, and we want to build a community and to talk about mining in all of its context. Even though we're not hearing so much about the battery revolution and the electrical change and whatnot, make no mistake, even though it's not in the spotlight right now, that transition is still occurring. And look at uranium and look at nuclear. The news coming out of there, we just posted an article as well saying, don't forget about what's happening there as well. And I don't want to muddy the waters talking about too many different mining sectors within sectors, but it's all happening. And we want to make sure that we frame that conversation with people and to give them the best opportunity, the best information, and to cut through the noise, which is exactly what the drill sheet does. It removes all the noise so you can look at the 500 companies out there and go, give me the 20% that have a shot. And that's what we really wanted to do, is create a tool to hone in and to find out which were the companies that would give you operational and leverage opportunities, and it's been working and it's been doing great. So if you want to dive deeper into the stats, make sure you check out our Substack, The Market Mindset. We also are going to have up a very cool summary of the evaluation by Linklaters and the World Gold Council. They came out with a white paper on pooled gold. So once again, another new product, another new idea. That white paper is very interesting. Perhaps we'll even do a full show on that one, but take a look at it. We've got that summary and that breakdown. That's for free. Just go take a peek at it. But it outlines how pooled bullion structures could be used by institutions and funds to create income streams without surrendering the security of physical gold holdings. So if you are a stacker, if you've been buying gold, this is something where it becomes much, much more interesting. Am I able to, quote unquote, lease out my gold into something a bit more formal? But could institutions do it as well? So this is a very interesting evaluation that looks at those implications. And that could really shift financial architecture moving forward. Remember, the US has vast sums of gold. Well, depending on your take, it's a controversial opinion. So once again, this is what we look at the Market Mindset. We want to give you every angle, talk about some of the conspiracy, talk about some of the reality, and share that with you, and set yourself up for looking at where the next step ahead is. We really appreciate all the feedback. Once again, we have lots of drill sheet scores for you out there, and we want you to become a part of this and engage with us. Keep sending us emails, reach out to us on X and on LinkedIn. Those are our main kind of drivers right now. And we really appreciate all your support. Watch out the next couple of weeks, especially the next month, 6 weeks. You're going to see a lot of information come out from us because things are looking very good. We'll talk to you real soon. Take care.